Oliver, let's start with today's news first, that the Co-op has pulled out of buying 600 branches from Lloyds. Why has it?
Well, the Co-op's reasoning that it puts forward itself is that since it agreed the deal last year, the economy has deteriorated, there's very little chance for recovery, and that added to more onerous regulatory requirements make it no longer worth doing the deal. I think those regulatory requirements are actually a far bigger part of the picture. The Co-op might well have struggled to raise the capital it would have needed to fund the deal.
And so do you think those reasons are true, or is there anything else going on in the background there?
I think that's probably fair. The Co-op needs to find capital to fund its businesses, and it doesn't have shareholders that it can ask for capital. So it's very difficult to find out where it can raise the money. It can sell businesses, and it's doing a little bit of that, but it's not the kind of organisation that can easily raise money.
So explain to our viewers, they might be a little bit confused, as am I. I was under the impression that retail banking is quite a profitable business with quite high ROEs, yet we've got the Co-op pulling out of this deal, we've got Santander pulling out of the RBS deal. What's the truth? Is it a good business or not?
Well, if you get it right, it can be a good business. There's very specific reasons why the two deals fell down. The Co-op deal because of capital and perhaps the economy as well. The Santander deal, partly their IT issues was a problem. You had two established IT systems, one at RBS, one at Santander, and the process of putting them together was very hard and very expensive. That's why they fell apart. Now, if you can take those costs out, if you're a standalone, perhaps you can make it work. You put the capital in, return on equity can be sort of 10 to 15% for these kind of businesses, so that's not bad if you can keep making that. So they could be very good.
So what happens to these branches now?
Well, now they're being lined up for an IPO, perhaps later this year, more likely into next, I would think. But there might be interest elsewhere before that. The RBS branches that it's now trying to sell have attracted a lot of interest from private equity and from other institutional investors. Some of those that aren't successful with RBS might well turn to the Lloyds business, which is not exactly the same. Lloyds is more retail, the RBS business is more business and corporate, but nevertheless it's a similar kind of business, so you could see the same kinds of people being interested.
And if it can generate 15% ROE and you don't have the big system integration problems and rates are at an all-time low, why wouldn't I be hoovering up IPO shares?
Well, you might well do. Of course, it depends on the price and whether there's a good enough discount in there, depending on what the rest of the banks are trading at. But they could be quite attractive assets.
Okay, well, let's wait and see for that IPO. I might get some myself. Thank you very much for that, Oliver.